I'm joined by Edward Bonham-Carter, who is Vice Chairman at Jupiter Asset Management. So we asked our customers the questions that they wanted to put to the investment management industry. So firstly, what will the general election mean for markets?
Well, we don't know who's going to win, obviously, and it really does depend who's going to win. If the current Prime Minister, Boris, as people like to call him, wins with a majority, I think sterling will go up a bit more and the market will definitely have a bounce. If the Labour Party get in, I suspect the market's going to sell off, if you want me to guess, 10 to 15% if they have a majority. A hung Parliament is pretty bad news as well. I don't think the market will sell off quite as badly, but we'll have a prolonged period of further uncertainty. So this election's quite important in terms of the market outlook in the short term.
So there's been more interest in so-called ESG or ethical investing recently. What are you guys at Jupiter doing to kind of meet that demand? And do you see that there is demand there yet?
Yeah, last part of your question, absolutely. There's huge demand amongst investors and society for ESG investing. Funnily enough, Jupiter's been in this space since 1989 or earlier, since we launched our ecology fund. So it's always been front of mind here. And the way I think about it is we're bottom-up active investors here. So we look to invest in sustainable businesses as a whole. So that includes the environment, but it means sustainability in the widest sense of the word. What I mean by that is the business looking after their customers? Are they looking after their staff in the widest sense? And the wider community, which might be their suppliers, their regulator, their local environment in terms of social environment. And only then do the owners, the shareholders, get their just reward. So if you like, you inverse the old relationship. The old way of thinking in the 80s when I started my career was about putting shareholders first. Shareholder primacy it was called. Now it's all about putting your other stakeholders first.
And so do you incorporate that throughout all funds, not just ones badged up as ethical?
Yeah, we're a great believer in Jupiter having different approaches. So I think the unifying theme is one of sustainability in a corporate ethos. And so when we're looking at the management of a business, we're looking at their strategy, at their governance, we want our investments to be around for a long time. We're not traders. So I think it's very unlikely we're going to be investing in a business that does bad things, if you like, to their environment or has a toxic environment internally.
So a lot of headlines recently have been focused on Neil Woodford and the closure of that fund. So obviously our customers are particularly interested in that. So what do you think that the asset management industry and fund managers can do to restore confidence and trust in the industry?
Yeah, I think the lesson learned is one about transparency and transparency about liquidity of investors. So I think it's incumbent on fund managers first to make it absolutely clear what the fund strategy is. What does the strategy do in terms of the name on the tin? Does it deliver to that? Transparency in terms of the rules. And then if you do have illiquid holdings, and there's nothing wrong with illiquid holdings, just customers need to be aware of it and the consequence. So here at Jupiter, we spend a lot of time analysing our portfolio liquidity and being absolutely clear that we describe the strategies very clearly to investors on the fact sheets and on all the documents. And I think the fund industry as a whole has got to take that lesson away and think about their communication and their transparency on their underlying strategies. The other thing I'd say is about skill set. I mean, Neil Woodford was a very skilled manager in terms of big cap stocks. And he went into an area, I would suggest as a personal view, that he had less of a skill set in unquoting investors. So I think the issue is concentrating in the area that you have an edge as a fund manager and a fund management house.
And so you have now had 35 years in the investment industry.
Thank you for reminding me. Maybe a bit more, 37 I think. 1982 I started.
Wow, okay. So if you were a first-time investor today, what would be the kind of one big tip that you've learned from your career so far that you would give to a first-time investor?
Don't panic. If there's one big tip, I think there are a number of lessons, obviously. If you're a DIY investor and you're doing it yourself, you've got to read about the subject. And I think psychological approach is very important. But then there's the basics like reinvest your dividends, diversify your investments, and don't look at the market too short term. These are long cycles in the market. So I think staying calm and being informed are pretty good rules for all investors, however experienced or inexperienced.
And so then our final question is slightly trickier. If you were only allowed to use one metric to pick a fund on, what metric would you use?
Well, if you're investing in an active fund, if I'm an investor and I do invest in funds, often Jupiter funds, it's what's the skill set of the house and the fund management team? What is their edge in order to determine whether they're going to deliver alpha? So it's alpha delivery skills is the key to look for as a first starting point.
So it's more about the people than anything else?
People and the process, they go together. You need to be satisfied that they have an advantage over the market. This is a difficult business, so you need above average skill and talent.
Excellent. Thank you very much for joining us today.
Pleasure. Thank you.